commercial real estate isn't part of the buoyancy right now. And instead of talking, we could talk sell side, buy this stock, sell that. How about talking to somebody with a heritage back to Grubb and Ellis, and he's with Marcus and Millichap in the trenches of this. Hessam Nadji joins us right now with 26 years of in the trenches work. I love out on Twitter where there's an ex-JP Morgan guy, I don't have him in front of me, and he'll take a certain property, it's suburban, it's 1980s, either they're giving the keys back to the bank or they're selling it for an 86% discount. How bad is it out there in 1980s ugly suburban office buildings that WeWork used to be in, but they're not in them anymore?
Good morning. Great to be with you on the program. There are instances of those pretty terrible occurrences that we're tracking and witnessing all over the country, mostly in urban areas, less so in suburban areas, and very limited to exactly what you said, older product that's obsolete, that hasn't been kept up, didn't have capital improvements, especially in the suburban markets where migration has benefited office usage. Look at Florida, for example.
Right.
The office market there is doing far better than many other markets.
What happens to that building? If this was in Quincy, Mass, outside 128, too far from Fenway Park for me to live there, but there's Quincy, Mass, typical building, belly up. The person that bought that for $20 per square foot or whatever, what are they going to do with that property?
Mostly reuse. Office is very difficult to reimagine and reuse. We saw retail go through a significant degree of reuse and reimagination of obsolete shopping centers over the last 15, 20 years. Much easier to do than office buildings, because the cost of conversion to other uses and cost of modifications is a lot higher. But there are entrepreneurial and private investors out there with a lot of capital on the sidelines that are converting these distressed situations to really interesting investment opportunities over the long haul. One really important factor, commercial real estate is being judged as a book by the cover of that example that you just talked about. And the generalization is really harmful because apartment fundamentals are fine. They're soft, but they're fine. Retail is coming back strong. Niches like self-storage, hospitality, they're all doing very, very well. Industrial warehouses still doing very well. A little bit of overbuilding.
Katie, how he did that? He said, basically, Tom, you don't know what you're talking about. Okay, continue.
Touch and go. But I do want to go back to that thought on conversion, because you must hear that all the time. Why don't we just take all this unused office space, convert it into residential? Like you said, I mean, the cost to do that is very high. But elaborate a little bit more on that. There are some people who are trying to do that.
There are, and there's examples that work out if the basis of acquiring the distressed office really justifies the amount of cost that there is. We're seeing other uses start to pop up. It's interesting how versatile the market is. You have like data banks, you have outsourced call centers that are now able to get housed in some of this obsolete or older or highly distressed office properties that weren't even on the radar 3 or 4 years ago or before the pandemic. And the one thing that it's also important to communicate, the perception is that this threat of what's happening with office use may bring down the entire banking system or may become a contagion for commercial real estate loans. The banking system has a 3.5% total exposure to office loans as a percent of all loans outstanding. So, and half of office space is performing just fine. The newer suburban product, the newer urban product has a 10 to 12% vacancy rate. It's the older, obsolete urban market that's seeing vacancies of 25% or higher.
Well, focusing on the urban core, I want to talk about the path that even got us to this conversation, because the typical narrative is that you look at the pandemic, this shift to hybrid work, that really killed off a lot of what you're seeing in the urban core. But you make the point in your notes that office demand, actually, it was deteriorating before the pandemic even started.
That's true.
That's wild.
That is true. That has a lot to do with the fact that millennials were entering marriage age, or those that had already been in that category were moving to suburbs to buy their first homes, and they were tired of being in the urban core after 10 years of a demographic boom that really benefited urban America. That shift with
Right.
the millennials aging and moving to suburbs had already started to show up.
Do you notice how no one ever talks about, they talk about the marriage age.
Yeah.
Nobody ever talks about the divorce age. No. That's where you're moving from the suburbs to wherever. I don't know why I brought that.
Probably back to the city.
This is brilliant. I was with a real estate heavyweight last night. I think he owns half the Upper West Side. And I said to him, and I think the media has really got this wrong. The magic of your business is there is a loss taken. I get that. But after a 7-year hold or whatever, when the loss is taken, the market clears and we move on.
Correct.
I don't think that's talked about enough.
Correct.
Expand on that.
That's the benefit of owning commercial real estate for the long term. And if you don't get over your skis by taking on too much leverage, there is very few instances where you can't ride out a downturn.
You write it out and you wait, and then
That's
you're buying
exactly
it at
right.
20 cents on the dollar.
Right.
Are people really? My answer is foreign money's going to come in at 50 cents on the dollar. Where, basically, and this goes back to your heritage at Grubb and Ellis, where's your number on that?
Well, again, on a very selective basis, this is not a repeat of the early 90s RTC and mass scaled discounting of commercial real estate in a fire sale, which is what the RTC was.
Right.
What you're talking about is much more select situations, for the most part limited to office space, maybe some obsolete shopping centers. And so the 20 cents on the dollar kind of theme is not the overriding outlook for this market.